So we're moving on to the next session quickly. We have inside the mind of a VC, we have a panel discussion with Arihant Patni, Rajan Mehra, and Alok. I would request Alok, please.
Yeah, but first you guys can come up, right? So that all the photographs can start, and then I can do the bug. Yeah?
Yes.
Maybe I'm a slave. I'll sit. I'll do Vajrasana and sit over here. Two of my really dear friends. Rajan, of course, I've known for. I'm 46. Let's make that confession. I think I've known Rajan for 40 years. 40 years?
40 years.
So how many people in this room know each other for 40 years? Okay, we have a record here. Funnily enough, this is even more interesting. His father and so we went to the same school, and his father and my father went to the same school. So that's as close as it gets, right? That's as deep as it gets. How many people have been to Campion here? Everybody should put up their hands, man. Okay, awesome. Do we need to bore the audience with this managing director, Nirvana, boom, boom, Clearstone? Dude, he gets the money, man. He gets the math. He gets the product. He's got the check, yeah, mota moti. Checkbook uske paas hai, to zyada baat nahi karenge. Great guy. It's been an honor working with Rajan. Arihant, I've met and known for a while now. I think 5 years or so. Legacy, of course, is the surname. If you don't mind me talking about it. And how many people have heard of Patni Computers? Okay, so we know we have a seller in the house. So family of Patni. But I think what is most remarkable, this is the other really interesting thing about entrepreneurs and the entrepreneurial generation that continues. Rajan is third gen, Rajan now, grandfather or father?
Grandfather.
Grandfather, third gen. You're third gen? Yeah. Third gen. It's very interesting. There's so much depth, there's so much sincerity in putting mind and capital to work, which is so unique from what we've seen in the yesteryears, where there was arrogance, there was wastage. I think the whole world has changed, right? It's never about me being rich and therefore I've done it. It's about me being rich and what else can we do with it. And of course, proving to the world that it's not your own money. You raise money from so and so forth. So, of course, both these gentlemen also have the most favorite degree that I have not got in the world, which are MBAs. And this man is an MBA from Wharton, and this man is an MBA from Dartmouth, right?
Yeah.
And have you done PhDs also?
No.
So, you almost did?
And the funny story is that my dad called me. He said he.
Can you hear it? Can everybody hear Arihant? Awesome.
Because I was doing my PhD in statistics actually, and then my dad called me. He said, "What the hell are you doing? You're Marwadis. Marwadis don't study so much." He literally said, "All your ass back to Bombay. Get married, get to work," and that's exactly what I did in that order.
That's the format, man. It always works. Except that you got married 25.
No, I got married 27.
I got married 22, man. The formula still goes. I never got a chance. So that's the introduction. I think the other stroke of luck is that both these gentlemen are investors in game students. So it's an honor to be with them on this stage. Yeah, I think we're done, right? Let's go.
So I have a confession. That photograph is 10 years old.
Sorry? That photo is 10 years old.
In case it isn't clear.
So I want you to move. Yeah.
You're still looking good, Rajan.
Yeah, thank you, Ashwin.
Yeah, we've known each other for like 50 years now. So before anything else, guys, anybody has seats next to them which are empty right now? Any seat next to them which is empty? None at all. If you do have it, just put up your hand and then someone who's at the back can come and occupy it. I think you've never seen a full house like this before. It's all because of the Mr. Moneybags.
So just a clarification, Alok. I manage other people's money. So you made this reference when
you got the checkbook, yeah.
I'm the other.
That's being spiritual. We don't know all that.
The more interesting thing to know is are they carrying their checkbook?
Checkbook is there. So did you check your mail?
I have not checked my mail in the last 10 minutes.
Did you check mail?
Just now? No.
Yeah, so there's a mail, man. We read it out here. So dear Arihant Rajan, I am a very young man. I may not have come from some great MBA schools that you have, but I am trying very hard. I know that you are trying very hard to do a lot of bad things in my company, trying to take my people. You are trying to take my money. You are trying to take my co-founder. You are trying to take my technology. You are trying to take me. I hope you don't kill me. and I hate you, and I don't want to see you guys ever again.
Okay.
What the hell are you guys doing, man?
So let me come out. So Alok is referencing a conversation.
No. That's not good. There's no connection. It's just a joke.
No, but just, in all honesty, so we are investors in a company called housing.com. As many of you may know, there's recently a controversy around this. Rahul, who's the founder of Housing, is actually a great guy.
Awesome.
Okay.
I'm happy we're bringing that up.
No, he's a fantastic guy. I think he's a young entrepreneur.
Yes.
He's probably, 25, 26. And you know what, sometimes how you say things can sort of get picked up, taken out of context, and sometimes you just got a lot of passion, and it's unorganized emotion that emerges.
That's
So I know there's been some sort of press, and I think there's many learnings that have come out of that. But I do think that A, Rahul's a great guy.
Sure.
B, I don't know if anyone said this loud enough, but all of the investors are fully backing him. Okay, and I think it's unfortunate that there was some of this crosstalk. I don't think that should have happened, but I think there's enough lessons learned, and I think we should move on from that.
So Rajan, absolutely. I mean, I didn't want to make it out to be like a
incident
that is bothering any of us.
Right.
It's very surprising. I was watching this Arnab Goswami thing yesterday. I don't know if you saw that or not.
It's
blowing up, man. It's blowing up. And while it's blowing up, the funny takeaway from that is that it's actually helping him. Because the one thing that's emerging is that this man, whether it's truthfully there or not, and this is why I raise this metaphor, is that he's speaking passion, he's speaking his mind, he is no holds barred.
Yeah.
He is talking about protecting himself before being courteous, and he's saying, boss, don't do this shit to me.
Yep. So I think there is a lot of passion. I think, just my own perspective on life is you couple passion with humility, you get great outcomes. Okay. I think Rahul's a very humble human being if you meet him, but he's just intellectually a visionary. He wants to get out there and execute really fast. And again, so some of that comes across in when you try and organize this on media. It's a challenge.
Please feel free to put that in, right? Has anybody that we know who's been really successful even been humble? I mean, his humility.
I think Dhirubhai Ambani was a very humble man.
Fair enough.
And
that's old world charm, right?
But he was very humble, and he was still very focused. He was execution oriented. He made sure he was very driven, very passionate.
Larry Ellison, Gates, Jobs, the two Google guys, Zuckerberg. I mean, you see, what is Zuckerberg's card? What is his first card? Can anybody read me? I'm CEO? Bitch. That is his card, man. I mean, you give a card to a VC that says, I'm CEO, bitch. What are you saying? Are you humble?
There's humility, extreme humility and extreme ego are obviously two sides of the spectrum, but definitely most successful people that one could think of are eccentric, if nothing else.
Awesome.
So if Mr. Murthy is eccentric about being, very, very sort of down to earth and very, non-materialistic, there's Mr. Malia, who's the exact opposite, who's very eccentric about all of the opposite things, right? And I'm not using these as names that I think of in my head. I'm just using them as examples.
So
and Rahul's eccentric as well.
I mean, just sharing this very honestly with you.
Yeah.
I think a bit of it works nowadays because it just shows utter confidence in what you are.
Yeah.
And since we're talking purely digital right now, not real world, it's like, dude, you don't get it, man. I don't give a shit for you. Let's move on.
Yeah.
And that can come across quite arrogantly sometimes.
Yeah. And again, it's execution. Listen, your style is very. You will engage. You'll get out there. You'll put yourself out. I think the question is this, Alok. It's about having a point of view.
That's right.
And you can express your point of view without sort of being disrespectful.
Sure.
So my point about humility is not. It's just that you don't show lack of respect.
But last question. Does that also allow the other part? So we are all talking about and we are all entrepreneurs here, right? We're on Rahul's side, say whatever. But how do we know that the other party is not the aggriever, right? That it's actually because of someone really screwing things up.
And there you can resolve issues. Okay, I think there are ways to do stuff. And again, I have no specific comment on the episode. We're just talking about a principle.
Sure, yeah. Awesome. Yeah. Great. So, there's a bunch of, how many people here are venture capitalized in this room? Rudra, some Awesome. There's a portfolio company here, Rocket. And how many people want to raise venture capital? There's no shame, man. You can all put up your hands. And you know, the whole idea of this session is to say we've got these really interesting people that have done a lot. They've funded, sold, been around. They're also operators. Rajan, you want to tell them a little bit about your operating background? Because what I really think comes out as a value is your real operating background, which very few people have in the VC world of today as we know it.
Yeah. So Alok may not mention this. So I started my career in the internet space in 99, 2000. There was at that time there was a company called eBay, which was very revered, globally, and it still is. But at that time was one of the up and coming companies, and we wanted to make the eBay of India way back in 99, 2000. Of course, the internet was nothing like it is today. So I was part of the founding team of a company called Bid or Buy, which then got acquired by a company called Bazi, which was trying to do the same thing. So I was part of the management team at Bazi, and in both of these roles, obviously roll up the sleeves, get stuff done, very actively involved. Interestingly, Alok's the guy who took the biggest check from us when he was at Contest to Win, from an advertising. And Ashwin and I tried to do stuff when Ashwin was still running India Car at the time.
Awesome.
So it was many, many years ago. And then fast forward to 2004, eBay acquired Bazi, and which was great. It was one of the few exits that happened from the Web 1.0 companies. I ran eBay in India post-integration through 2008. And then at the time I was stepping out, I wanted to do venture capital, but I partnered with another friend to start up a company called Car Trade, which is an auto classifieds business. And simultaneously got involved. And you happen to be another Saudi, interestingly. And then just got involved in venture capital and tried to get involved. So I think Alok's point around being involved in operations, I'm not basically a finance guy, I'm an ops guy.
And again, Arihant, if you just share your background in terms of, you had after a Patni kind of exit, whether it's the family exit, right? There are so many opportunities, and we've come across a lot of families in India who are doing a lot of stuff. I met Mr. Khurakiwala once in a conference, and he was so gentle in saying, "Alok, my biggest problem is my children don't want to do anything with business. They only want to do social work. They want to do. They are a musician and they don't want to do." Business is bad here. Paisa hai, you take care of it. So why would you, of all the things, go back to this grind? I mean, this is a painful business, right?
Yeah, no, it is. And first of all, from a family perspective, right? I mean, my grandfather, we're from Rajasthan, so we had a small jute trading business. Then my dad moved down to Pune and Bombay, and then we started Patni Computers. We meaning my dad and his brothers. So that's kind of been hard-coded in my DNA growing up, So I'm very fortunate to be part of a cycle that goes from inception to execution to exit over a period of 30, 35 years and create all of that value. So we were we had first row seats to the whole thing, me and my cousins. Right. I knew coding before cricket, and my good friend Chaitanya will attest to that, who asked me cricket trivia just 3 days ago, which I couldn't answer.
What is the question?
Yeah, no, let's not. These are moments when you are drinking.
Sorry?
No, it's okay.
Okay, that, you really don't know your cricket, right?
No, I did. He psyched me out, man. He just got me at a point where I couldn't answer. But anyway, so the point I'm trying to make is that when the exit for us in 2011 was incredibly emotional. I mean, you're looking at, and I'll say this very openly, that I think having your last name as your company name is good and bad, because when you finally let it go, it's really hard to let it go. And for us, that was a big event. And my brother and I, both very entrepreneurial, we said that, look, we're not going to just go sleep on this money or whatever it is, right? We have to prove ourselves all over again. That's what we took up, and that's why we're very active in the VC ecosystem. And the reason why we chose VC versus operating is, by the way, I'm a complete believer of operating experience, because that's how you learn what to do, what not to do, and so on and so forth. But we realized we don't have the ideas. There are people in this room and this audience that have the ideas. And if we can help them sort of grow their business, not just by bringing capital, but also bringing ourselves, then that would be an exciting journey.
Awesome. So, I think again at the stage at which we all have evolved and the stage at which we all operate, and especially I think Rajan and Arihant and the kind of people in this room, the guys who are going to come and stand in front of you have ideas, they have concepts, they have some working templates, they have some proof of concept here, there. But eventually, this is a conversation we had about that guy that, that you referred to, the math guy, which I found phenomenal. The question is, what do you invest in? Is it, and I want it like a breakout of percentage, right? Excel table, Zindabad. In terms of X percentage to the entrepreneur, Y percentage to the idea, and within the entrepreneur, break it down for someone who's been there, done that, versus, I like the way he dresses, versus, and it could be, right? Just the personality and the belief in that person, knowing very well that this idea is not going to work or will have to pivot.
We've done a couple of investments where the idea was very not clear. In fact, I'd say out of our 8 companies, almost 5 have changed what they do.
Wow.
Okay, and we're very comfortable with that because we are going in backing the guy or the team.
Awesome.
Okay, so that's number one. And that, but what do we look for in the guy? Is first, do you know where you stand versus best in class? Unfortunately, very often people have either not invested the time or are not open to accepting that they're not even thinking about what best in class looks like. So first is knowing how far you are away from where you need to be and knowing how to get there. Okay, so that's one. So what that means is you're looking for a person who's a learning person. Okay, so that's very important. The other thing is, will that person be able to attract a great team around him or her? Okay. Will people be inspired by the person, both by the passion, energy, as also, what they
the charisma, the energy.
Okay, that's very important. So a lot of it is around the person, I'd say more than the team initially. And then the second thing is the opportunity large enough? Because as a venture capital fund, very often you'll find great ideas, they'll be good businesses, but may not be very large businesses.
Right.
And one of the things that you do in venture capital is you want to make sure you have outsized returns. And the only way to do that is if you address opportunities that can be really large. So I'd say those are the 2 most important things. And very often, you'll find people who need a lot of mentoring, need a lot of handholding, are building great businesses, should not be seeking venture capital, should take non-institutional money and build their business. But the sort of glamour associated with venture capital, for whatever reason, okay, the press covers it a lot more.
It's free money, man.
Well, it's not about the free money, Alok. I find that, very often you made the comment that people think of balance sheet as the new revenue.
Yeah.
Okay. And this is a problem because eventually the tide will turn. See, a lot of people in the room have probably not seen cycles.
Yeah.
Okay. And the reality is, if you grew up in the 80s and 90s, you've seen cycles. Okay. And that will inevitably happen in industry. Yes. Cycles are becoming tighter. So I think the ability to build a business that can withstand cycles is very important. And I think in the last 3 or 4 years, some of that seems to have gone away. The last point I'll make is the level of innovation and energy and passion we are seeing, even just in the last 6 months, is just unreal. Okay. So we sit in our office and we say that there is a tsunami right now in terms of innovation that's happening in this country. A lot of it's happening in, and the people who are making it happen are people who are, let's say, 21 to 35. Okay. And we're just trying to understand how to make sense of this pattern and sort of help them along but participate in it as well.
Awesome. Arihant?
Yeah, I mean, so I'll speak more of slightly the earlier stage, funding and the angel funding. And of course, echo what Rajan says, but really the team is what differentiates. And 2 aspects. We talked about, being, humble and egoistic and stuff like that. I think the entrepreneur's got to have the belief that he can hit this out of the park. Because if he doesn't have it, then it's very difficult for someone across the table to have it. And not just have it, as a big-headed thing, but be able to articulate it in a way that's well communicated. The second is that he should be, or she, or the team should have enough listening ears, because unless you're able to listen to whether your product is, how far away it is from world class, or whether you need to pivot, you have to listen and hear and be able to act on it. Otherwise, it'll become very difficult to kind of, scale and grow. So those are the two aspects we look at.
So Rajan, and again, there are 3 or 4 kinds of VCs that we've all come across and have seen. One's this flying suitcase guy who came and went. This is early 2000 to 2007, 8. I think to your point, right, the world changed on the 16th of May. So on the 16th of May 2015, the world changed. I think there was a reset button that got pressed. But before that, we had a lot of stuff that, there have been VC firms that have come and gone, bankrupted. These guys who come in because they smell India and they go back. The second one are people who've, been steady state, will only involve when you really got something going. Now comes the other two, right? One is the kind of, people you guys are, which is very open in terms of come to me, tell me what you do, let's listen to you guys. And if we really like you, then we'll give you what we think we can give you. You can do more from outside. And then you're on your own, man. You're on your own. We're happy to help. We're happy to, make you think through, like, the stuff that we've done together in boardrooms. And when you need us, we're around. Right? And we'll keep probing you as and when we think we need to probe. Now the fourth class of venture capital, right? Rajan's already smiling. Is the reverse, right? I am so big, I can do anything I want. You want 1 million, I will give you 10. You want X, I'm going to give you Y. But I am going to be in your bedroom, man. Forget boardroom. The bedroom VC, as I call it. वो तो अंदर घुस जाएगा, छोड़ेगा नहीं आपको. And to be honest, right, a lot of, I'm not going back to quotes but a lot of that pent up frustration is coming through. Out of 100 entrepreneurs, one's going to blow up, man.
But there it's, and again, without talking about a specific case, you need to understand who you bring to the table, okay, and the rules of engagement, okay. So I think it's very simplistic to say that, people give you $10 million or even $1 million, which is a lot of money, okay, and will not expect something back in return. Now, I think the terms of engagement are this: an entrepreneur can control the destiny of his or her company more than anybody else, only because it's all about the product, okay? And no VC can come in and run your company. Let's be very clear on that, okay? However, when the amount of capital becomes so much, one of the things I've been sort of talking with a few companies over the last, let's say, I won't mind.
Yeah, same, thanks.
I've been talking with a few companies, thank you, over the last 2 weeks, is the amount of capital that's available in India today can fund, if you are well capitalized, it fundamentally transforms who's going to win and who's not going to win. So, correct. But when you start playing that game, you move far away from product being the differentiator to capital being the differentiator, and then you surrender control. Then don't fight it. Okay, either you build your company capital efficiently, you control, or if you allow capital to become the differentiator, then guess who's in charge? So then,
It's phenomenal, man. This is the kind of insight that, it's more than, I think it's the depth of the point, right? That I think for me, Rajan, the second point is a byproduct of the first fundamental statement that the capital can change the winners and the losers. And that's a phenomenon never seen before. And Ashwin and my father and all these guys, how many people here involved in brick and mortar businesses? Everybody, right? Parkson's, Chaitanya, Kejriwal, by the way, just put up your hands again. Every time I have to introduce you, I don't know why, man. You don't even give us a check. So this guy just cut, like, they did a massive secondary and primary, right? Whatever, man. There's no need. Money is money. So the thing I'm trying to say is, in the real world, Rajan, it's not that easy, right? It's impossible to get that kind of tsunami of money that can then make or blow up a port or make a city, right? But in the digital world, which is what we are seeing, it's like, Amazon's going to blow up $25 billion. It's going to win the market because there's nothing else to do. I'm just creating a thesis. So I think from an entrepreneur point of view, it's very difficult to understand the A or the B. And my bigger point to you now is going to be, and Arihant, you can answer this, is do you even have a choice? So either you don't play a game that is going to be capital intensive and say, boss, I like to be in e-commerce, but that means it's a capital game. Versus saying, boss, I want to be in the games business, which is creative and product and magajmari and VCs aayenge, wo on the way to the airport and back will probably drop into your office. So, I mean, how do you dimension your investments in these philosophies? Because you guys ride with the flow, right?
No, I think, so what Rajan said was spot on, and I think it's about what the entrepreneur really wants to create, right? If they are aspiring, a team is aspiring to build a business within a space that's similar to Flipkart or Amazon, then clearly that is a capital intensive game. And I think that then you have to structure it in a way where you're able to attract capital, whether, and all of that kind of stuff. I think I find too many people that come and pitch to me and say, hey, this is the story that's going to sell, and that's why we're saying it. And I think that's wrong. I think you have to ask yourself and say, what is it that we really want to do? And then we will help you figure out whether you need 500,000 or you need 10 million, and then maybe help you get where you need to be. Because otherwise, if you don't follow your heart in that sense, you're just going to chase the money, and that doesn't work.
So you're saying someone's predicting the Economic Times headline 3 years from now, and therefore funding that story now, in a way, right?
Yeah, exactly.
So if I can just weigh in. Just if I break up company that say in the internet space, let's assume that that's what we're talking about, and we can talk about other companies.
Yes.
I'd break them up into consumer companies, consumer infrastructure companies, and enterprise companies. A very simplistic classification. Consumer companies will always be run by those people who are the most capital.
Yeah.
Consumer infrastructure has to be built capital efficiently, but the size of the price may be less than consumer.
Yeah.
But it's still indexed to consumer demand.
Got it.
Okay. Enterprise companies being built in India have a challenge that Indian enterprises don't want to pay to buy.
Yes.
Okay. They believe in work for hire. So if you're building a product for the Indian enterprise, this is a challenge. So most enterprise companies need to build it for global markets. The problem is the cost of accessing global markets is really high, and the product differentiation is low. So if you come to the opportunity to build capital efficiencies around consumer infrastructure. Now there are some consumer companies which are broken out in consumer internet. So one of the interesting things that happened to me was in 2012 when we started funding companies. A lot of e-commerce companies would come to us because of my background at eBay, so on and so forth. And we did not do a single e-commerce investment where inventory was required.
Yeah, awesome.
It was a conscious call that this will be a capital efficient and an early stage investor.
Nice.
So all of our companies are either consumer infrastructure, or as in your case, when you came into Games to Win, it was zero cost of customer acquisition.
Yeah.
Okay. So I think you need to understand the game you're playing. You need to understand who you play with.
Yeah.
How many people are raising money or in the process of raising money or contributing? I'm saying seriously, right? Not just because you want to raise money, but you have some desire or whatever. Right? So I got off this call, Abhay Havaldar called me all of a sudden. And he said, Alok, you posted something that got me thinking. So first he called me, it was a missed call. So I said, you called me by mistake. Because Abhay Havaldar, for someone I idealize, doesn't call people up. So, Alok is the first name on the address book. So he said, no, I called you because I want to ask you, I want to share with you that I found what you said interesting. And I said, then tell me something now to break my head, because every time you reveal something. And he talked about the cap table. Very interesting. Little technical, but bear with me, right? So what he said is that, Alok, most of the guys who have cut these checks in these VC firms have never seen a down round. Okay, never seen a down round. Now, you're talking about deals which are not 3 and 4. 15, 20, 30, 40, 60, 80 deals, right? Done, lagao. And he's saying, if I'm looking at the cap table from the bottom up or top down, and if I'm creating a kind of parity with LP, liquidation preference, if I'm creating a parity with down round, and if I'm creating a parity with just ratcheting because it's across. Sorry guys, this is just, I hope everybody understands these terms. If you don't, then there's a Rodinhood blog to explain. So you can go and read that. Sorry, just a little technical, but I want to get their thoughts, and those who are raising funds get it, right? So this is a question for 10 people, but you'll appreciate it as the question goes. So his point, Rajan, was that, if there is a down round, and this applies to all, these guys will spend 5 years just reworking the cap tables, man. And that's destruction, right?
Yeah. Yeah, so I think,
what is the entrepreneur doing?
I think a lot of people may not be familiar with this, but I'll just explain one of the terms that Alok spoke about. Supposing you see someone raises $100 million at a valuation of $500 million, and they have a 3x liquidation preference. What that means is the first $300 million worth of value will go only to that person, even if he owns only 20% of the company. So I think the point that Alok's making is, if this $500 million value is not real, and you have to do a down round at $300 million, how are you going to get agreement? Because the only guy who wins is the guy who came in the last round, who only owns 20% of the company. Okay, so that's an illustration of what was being discussed there, and I agree. I think this is one of the complexities that people are not discussing enough about, and if the tide does go out, we're going to have to deal with it.
And no, sorry.
No, so that comes to the point of the raise, right, Rajan? Right. Why do you raise money? And that's the whole fundamental question. Everybody here wants money, but the question is why? The meditation of why. Now, a lot of the B school guys, those clumsy things that come out of there, those PPTs that hardly work with 300 lines in one slide. Ashwin Sanghi, you beat me, man. I thought no one could beat me on a PPT, but you did. Confession. They all say we want to raise in marketing. Well, that's all fine. Rajan, the question, and Arihant, the question is that, when you raise capital, either you say, I'm going to become a position of strength where, this whole concept of, dissolving competition, being the market leader, is all one, as we said, capital intensive, take it or winner takes all. But I'm coming to a more fundamental question. Marketing, for the sake of marketing. Team buyouts. We've seen a lot of reports in the press about 1 crore plus guys, 2 crore plus guys getting hired by the top 10, 20, 30, funded companies. And those guys last for 6 months and 8 months. Which means that you spent 1 crore or half a crore in getting this guy on board. You spent 30 lakhs in Corn Ferry and the rest in paying them. And this guy's burned up the money. So salary cost. The question is, Rajan, how do you dimension burn? Very fundamental question. Burn. And, Lightspeed Bejul shared this with me. He said, Alok, he was asking me, what's your burn? And he said, is there a zero missing? When I spoke to him last. So I said, a zero is not missing. He said, then is it in dollar or in rupiah? I go, bhaiya, itna paisa jal raha hai. So he said, I'm routinely coming across people who look into my eyes and say, boss, I burn 18 crores a month and I'm pretty okay. So the question folding into one sentence is, can you dimension burn for us in terms of what is legit and what is illegit and what is your appetite?
So I tell you, we think of burn as good burn and bad burn. Okay, awesome. And we think good burn is that which is building product and assets.
Okay.
We think, and again, there's times when you need to use money for consumer acquisition.
Yes.
Okay, but you have to build the financial architecture, for lack of a better word, of your company to be such that if the money is not available, you can survive.
You can still good.
Okay.
Yeah.
So I think the way to think about it is, am I so dependent on money that if next month I didn't get money, I would die?
Awesome.
Okay. That's just, as an entrepreneur, a stupid thing to do. Okay. So as we get into companies, we get into companies early. Let's say company's got $1 million. We'll always encourage them to go out, build product, infrastructure, team, and then on top of that, use money for acquisition dollars. Everyone, and the only thing we ask ourselves is, we know these companies won't hit break even with our capital. So the only thing we are focused on is, if we were the next round investor, what would we want this company to have achieved with our money?
Nice.
Okay, so that's what we are looking for, and we're okay with knowing, we all know that we'll shoot for the moon and probably won't get there, but that's fine. But what's the margin of safety? So it's actually not very hard if you're disciplined. Okay, where it gets confusing is this: that if the market moves rapidly and you're chasing a rapid market, you sometimes need to burn money because the vector of growth that people are looking at could be visitors, could be traffic, and so sometimes you need to play that strategic game, but you need to have the ability to dial down if you need.
And I just, you know, on your point of...
Patni computers, man, burn money, right? Imagine telling your granddad that, कि boss मैं तो 20 करोड़ रुपए उड़ा दूंगा हर महीने, और महीने के बाद महीने, और भैया
I would be written off the will. There would be nothing. No, so we in fact came from a very staunch cash flow business. You know, in services, the first mantra is that you break even in month one, right? That's the way we do business. And Rajan actually taught me and my brother how to think differently in that regard. And I think it's been a spectacular experience. But just on your point of consumer acquisition or customer acquisition, you know, it's also the dynamic that we've set up in India, right? I'll give you an example. In California, at the Hive, our fund there, we had a great deep tech company that we incubated. We created the idea, got people around it. And just a few months ago, it was acquired by Pinterest. So it was very quick, a very favorable outcome.
Stanford,
all, absolutely. All smart as sane, you know. But at the end of the day, Silicon Valley understands the deep tech. It funds it. There's an ecosystem around it. In India, it would be very difficult, and I'm to blame as well as one of the investors, to come up with a deep tech idea and fund product dev, just purely product dev. So generally what happens is companies come and say, okay, we've got the business, we've got a little bit of traction, you know, now I have to fund consumer or customer acquisition. And that's why it is, and a lot of, because I do so much enterprise play, a lot of folks will come and say, okay, to Rajan's point, enterprise I've demonstrated in India or in the Middle East, now I need $3 or $5 million to prove it in the US. And it's difficult to do that, right? I mean, it's difficult for someone to write a check just on that basis.
So I think, you know, Alok, just one comment I might make is the thing that is missing in India is, like in Silicon Valley, you have universities, government, and VCs who work in conjunction to make a virtuous cycle happen around technology.
Absolutely.
So I think we have a lot of good technologists in India.
Yes.
I think we don't have enough original IP being created. I think product insight is sometimes missing because the consumer or the companies that are buying are not here. And unless that ecosystem starts working together, you know, we'll always have this mismatch between great talent not getting funded and VCs just chasing sort of some themes all in a hurry, so to speak.
Right. So, you know, now just the people thing, right? And Arun Prabhudesai is here. Put up your hand. He runs tracking, world famous. Arun and a co-founder had a phenomenal idea about 5 years back. 5 years back? 4 years back? 5 years back. We seeded the company. I think he put in a lot of his time. I think the co-founder was a great technologist, had lots of ingenuity in his head, but he just flipped it. You know, he just like boom. I mean, I hate to draw this reference, but it's the bizarreness of what happened on the Lufthansa flight, right? It's bizarre. So we were in the first meeting with a VC, and we had got some money in, and this guy he lost it. Like, he didn't bolt us out of the boardroom, but he lost it. Now, what do you do when you have, I mean, you guys also, when you said young, right? 25 to 35, 21 to 35. The brain's not formed fully, yeah? And you know, it's like still, come on, man. These guys are still under stress. Girlfriend ka problem. It happens, right?
Yeah. Too much blood in the wrong places.
It blows up.
Yeah.
Blows up. We had to close down that company. We closed down the company.
I'm trying to remember if this is the same person I met you with.
Yeah. And if you remember, Rajan had that, and you had that comment, right?
I don't remember, but
Rajan had the comment.
But I think that is a big risk in our business. Okay, back to the question you started out asking us. Our business is more about understanding people and being able to work with people than being smart in finance. Okay, let's be very clear.
Absolutely.
Awesome, man. That's the headline of the day, right? That is the headline of the day.
Yeah. So, I mean, and we'll get it wrong sometimes. Okay. And honestly, I think, you know, there is this adversarial sort of sometimes positioning between VCs and entrepreneurs. I just think it's misplaced. I think we want to come in there. We want to work alongside helping companies build to their vision. But the reality is we want to have tough conversations. You know, we're not going to, and that's what we look for in an entrepreneur, not to get threatened by sort of being challenged. But the call is always the entrepreneurs. But yeah, sometimes, you know, you will have a situation like that.
No, absolutely. And you mentioned Abhay. Abhay is all about, you know, putting backing big money, and he invested in us. So I love him. Exactly. But, you know, I heard this somewhere. I thought it was really interesting to Rajan's point about the to and fro. It's like, you know, you fall in love, you get married, right? And then the day that you get married, your wife starts wanting to change you every day, day after day, right? Oh, 5 years later, you finally change, and your wife looks at you and says, "Who are you, baby? You're not the person I fell in love with." So you don't want to do that to a company where you are so superimposing that, you know, 3 years later you realize, well, these guys completely, you know, are doing something very different. So there has to be that tug of war.
Right? A lot of people have templates, right? Like Ashwin said, turn page, exit page, funding page, milestone page. जब page नहीं हुआ तो turn करो, उड़ा हो तो founder को वापस लेकर आओ, right? So there are VCs we know who change the CEO like we change drivers, right? Yeah. And it's a tough one.
Yeah.
How are we doing on time, Asha?
Can we open it up to the
Sure, absolutely. And I can keep going. We can last till midnight over here, right?
Questions. We've got a lot of
So guys, shoot. Like the VCs are all here. Don't ask for money. That's all.
It's all him.
And maybe define yourself a little bit. Just like who are you, where do you come from?
Hello, my name is Hardik. I'm coming from Surat.
Okay.
The question is,
Put the mic on your head.
so the question is, we got this company like, let's say, housing, and then this big media house, you know, every day I open up Economic Times and there is this big ad. So as a consumer, it affects me that, okay boss, this is better company. But as a student, I know that, you know, housing is doing so great, they're working so hard on this product. So how do you fight to such a big media house, which has got, you know, number of customers, every morning they'll read newspaper and they'll make a decision.
You know, so maybe I try and answer this at two levels, right? If you're an entrepreneur, okay, and you are chasing something, you know, it's very much like if you were going to war with a much bigger army, okay? You have to ask yourself, what is it that can make you win, okay? Now, candidly, you know, just to use an example, David won against Goliath, but it was because, I forget the biblical context, but, you know, it was because he did something cleverly that they didn't do. So I think, you know, sometimes fighting the might of money is hard unless you have a great product, okay, and great product differentiation, and you focus on that to win, and then you use your energy to get people to become believers, you hire good talent, you get capital around you, and you make that happen. Because the one thing we've seen, even in today's world, is who would have thought that when Facebook started out, it would be the biggest threat to a company called Google, which had won the market, okay? But the reality is it emerged from nowhere, and part of the reason that WhatsApp has gotten acquired by Facebook is WhatsApp could have done to Facebook what Facebook did to a company called MySpace, which we don't remember today. So I think in many respects, it is possible, it's really hard, there needs to be a strong belief, and there needs to be real insight, but sometimes, you know, Alok very often gets spiritual about these things, but the reality is, if there's an internal desire to make these things happen, they do.
Nice. There's also bloody good luck. At the end of the day, it's all bloody good luck.
You know,
can I answer?
Just quickly share you should one share before I forget. Does anybody remember the SARS incident in China?
Yeah.
Yeah, you know what happened, right? People got blocked out, like one of those movie things, right? That Hollywood makes. Everybody's in the room and blah blah blah. Does anybody know the company that was born because of SARS? It is going to shock you. You know, we had a company called Mobile in Rajan. We had a guy called Ranjit Singh who had gone to Beijing that day, that month. He was quarantined in Beijing for 40 days and he used to be given food like a prisoner. That was the halat of SARS in China. Tell me the company that was born because of SARS. You will die when you hear the answer. Alibaba.com. No one could travel to China. Everything stopped. People said, how the hell do we discover content in China? This man started listing, and that is how it began.
Wow. Who knew?
So man, you can't get a SARS in your life every time. So we can get swine flu for sure. You get it?
Hi, my name is Kejriwal. I'm from Baroda, one way broadcast.
Kejriwal, man. There are too many Kejriwals in the house. Okay.
So I'm also from Marwadi Bani, and my wife, grandfather, everybody says, do whatever you want, just make sure the company is profitable. There is no definition of burn cash in our company. So the question which comes is, let's assume we are not burning cash and we are doing okay. And the question one was about burning cash. The most of the cash required is for customer acquisition. As you said, your product is fine, doing fantastic. Now, if you don't get that cash, one fine day, let's say I'm in a business, let's say pick another competitor company, you're a new company who gets a lot of fund, and you're talking about the third company who's capital intensive and fighting that capital business, he will just kill you one fine day, right? Whatever good the technology is, whatever bad it is. So, is that customer acquisition fund good, bad, or are you okay with funding that customer acquisition fund? The point two, that's the next question if I'm allowed to ask.
So let's give it a go. So you're saying, so your question fundamentally is, why do these guys here fund companies that make losses? Because
no, maybe I got it wrong. The idea was you fund companies for customer acquisition, right? According to your definition, is that a right strategy? Or I mean, let's say if I come and ask, I'm asking for.
I think we've got the question. We've got it. So, lady, madam, can you sit here? There's a seat here. The lady in the black. Yeah, there's one seat here, right in front. Come. Right.
Yeah. No, I think it depends on, a lot of different factors, in terms of, what the business is, where the company's at. But if you ask me, purely funding, so a cash flow analysis where you run a funding for customer acquisition is not bad, provided that you are disciplined around it, provided that you have metrics that can measure what you're trying to do. Depending on what industry it is, there are metrics out there where you can actually figure out whether you're spending the money that should be spent for customer acquisition, you're spending too much, you're spending too little, is it effective or not? I think that those are the important elements that at least I would look to hear, because just blatant customer acquisition and saying, okay, I'm going to hire 5 people feet on the street and they're just going to go get accounts for me is not really an acceptable answer. It has to be a lot more, thought out more deeply.
Can I just add something here? Also, I think the definition of consumer acquisition also now needs to be thought of.
Yeah.
What is consumer acquisition? Let me give an example. How many people, I think everybody here uses WhatsApp, right? Has everybody ever seen the sign up page when you signed up for WhatsApp? Do you remember what was written on that page? There's a very beautiful para, half a para that's written, which is amazing. Does anybody remember that para? Let me remember and read it to you. It says, we are Google, we're ex-Yahoo engineers. We love to build a great product. We hate advertising. We will never have advertising in our product. You will have this product to use for free and enjoy it for the rest of your life. That's the stated sign-up page. Now let me ask you, Mr. Kejriwal, if these two WhatsApp guys show you a graph of usage and say, कि मैं जिंदगी में पैसा नहीं बनाऊंगा, but this is my graph and the cost of consumer acquisition is adding a technology to compress video to share. I think everybody agrees that WhatsApp video compression is unbelievable. Would you fund that company? Sorry? You would. That's the point, right? It's just it's a very academic question without knowing what you're looking at.
Yeah.
How many people have used Instagram? Man, when was the last time you saw an ad on Instagram? But would you fund Instagram? Dude, we died to fund Instagram. Right? Twitter, man. This whole story of that Asian man who got into Twitter long back. He went to parties. Every party that the Twitter teams were going to, everywhere in the world, Rajan and Arihant, to coax employees to part with their ESOPs. Because he had such fundamental belief in Twitter. And he made like $3 or $4 billion and they listed. So I think it's getting into the skin of a product play and understanding what customer acquisition really means. For a company like GameStone, right, which Rajan funds because he's put his money in, consumer acquisition for us is content. If you don't make content, we're dead. Suresh will tell us over the period of time, Suresh, I mean, companies like Sony, Star, CNBC, which you run, when did they start breaking even? It takes a long period of time, right? So runways are long. It depends on what you're putting the fuel in for. Yes, ma'am.
Hi, can I ask you a question? Okay, I'm Rahul Banka. I'm from Mumbai. I've started bootstrap this company called East24.com. We are basically, a company which helps women enjoy jewelry the way it should be. Jewelry is an expensive accessory. We are trying to bring affordability in enjoying diamond jewelries. Now, I didn't have any jewelry background, but I thought of that there's a need and I wanted to find a solution to that need. I found a solution, risk management and all that. The challenge was I never had a co-founder with me. So I'm putting in my own money right now. I've been funding this company. I brought it to a stage that I've launched the business. Now, I heard both of you, and also I heard from others that, normally VCs look for a team. But for you to build a team, it's like either you have a co-founder who chip in their own money and then you build your team, or otherwise you need to have people to whom at least you need to pay those basic levels of salary. There may be ESOPs, but that needs to be beyond that basic level of salaries. Now, if you have to give those basic levels of salary, you need capital. You need capital for technology development, you need capital for marketing, you need capital for everything. So in that situation, what an entrepreneur should do?
I'll be very honest with you. If you don't have one of the two founders being a tech person and one being a product person, you are probably raising capital. Okay? Because market opportunity now exists pretty much is visible to the whole world, especially in big markets. So for example, the insight you have is great. You could view it as a person who's selling jewelry offline, wanting to go online. Okay? In which case you use traditional metrics of cash flow, so on and so forth.
No, it's beyond that.
It's beyond that. Right? So when you are going after such a space, I would strongly encourage you to get a tech co-founder. Okay? Because you will part with equity, it'll seem expensive, but the reality is that you have to have a tech co-founder to build this and get funding out.
Okay. Now, basically, technology, the way I look into it, just like take an analogy of a bank.
Yeah.
Okay. When you deal with a bank, you have a net banking, you have ATM banking, you have a branch banking. So for your different needs of banking, you have different channels of.
So what's the question?
So my question here is, if VCs look into that, okay, it's a team that needs to be funded. It's a chicken and egg kind of situation which I am feeling. That okay, unless I have capital for me to build a team,
because you don't want part with equity.
No, I'm open to part with equity.
But you will find a co-founder who will work with you. This is the best time to be a co-founder.
Perfect.
And you can bring in someone who's willing to put sweat in, is willing to build the basic product. Okay. And when you get to customer acquisition, if you build some traction on product, you will be able to find.
So
I disagree.
basically, then are you saying that till the time you find a co-founder, you should not continue with the business?
Can I interject, Rajan?
Because I actually, when I was trying to get into this business some 18 months back, I spent a few months, thinking, okay, I went into various sites, met lots of people, networking. See, I'm a middle-aged guy. I'm 35 plus. Now, the challenge we face is, we don't have,
Listen, let's make it simple, right? Let me explain it in a little more brutal way. There's something wrong with your approach to your business because you cannot sell the concept of co-founding to 10 people. You cannot sell your company or your product to anybody. So start by selling the opportunity of being a co-founder. You should be telling us, well, there are 10 people, I don't know who to choose. Can you interview 10 people and tell me who should I choose as a co-founder? It begins, the gentleman who said, I don't have a mic. Well, nobody has a mic when you're an entrepreneur, man. So it's your job as a middle-aged man or a Buddha man or with arthritis, I don't care, to go out there and say, hey, you 200 people in the room, this is my opportunity. When will, please line up outside to become my co-founder. Because if you can't sell it to people internally, how will you sell it to these guys?
And you have so much access now thanks to the digital age. So,
Ashwin Sanghi. Yes, sir. One second. Just this Ashwin Sanghi asking Rajan Mehra.
So, can everyone hear me?
Yes.
Rajan, you and I have seen the ups and downs of this whole, e-commerce and .com world. I mean, for those uninitiated, in 1999, when Rajan was heading up bidorbuy.com,
yes,
I had just started out a car portal known
India
as IndiaCar.com.
Yes, boss.
And
we tried to sell you, but
we did a lot of stuff together, and we burnt a lot of cash together. But the point I'm making is that we also saw the .com becoming .gone exactly 12 months later.
yeah.
I somehow get a feeling when I'm looking at all of this around me, a sense of deja vu almost.
Is it jealousy?
So,
I mean,
can I give you a one-word answer to that question? Yes, lots of it.
Yeah.
But anyway, long and short is, Rajan, what is different in 2015
it's a good question.
to 2000?
It's a great question.
I think it's fundamentally different, and I'm not talking about the valuations. I think the level, the mobile devices change everything.
Yeah.
Okay. You have 300 million people who are suddenly feeling empowered, and you have another 100,000 people out there wanting to empower them. Okay. The level of innovation. Every day I sit through 6 or 7 pitches, and I'm not tired. Okay. It is just, you're hearing these ideas, and the only thing that you're trying to do is pattern recognition and say, how do we help them? How do we help them? Okay. We can't invest in everybody. Okay. But, and we get tired. So in our team, we say we are in a war right now because there's so much happening right now. The only thing you shouldn't be doing is standing still. So it's fundamentally different. In terms of valuations, the view that investors have, and this is actually a top-down view, I believe, there's about $700 billion of consumer value in India, revenue, that getting disrupted today in 4 broad spaces: product, services, banking, and media. Okay, and the reality is that the incumbents have been slow to respond. Okay, there are, historically incumbents have used regulation to win. Okay, sometimes consumer delight. You have people who are starting out with consumer delight as their core, going after these big spaces. So the size of the winners will be big. I think the thing I worry about India is, in India, is there enough opportunity being created for job creation? Okay, and I think there will be centralization of power, okay, centralization of assets. And so can you create enabling innovation as opposed to efficiency-based innovation? Okay, and that at a societal level, that's what I worry about, but I do believe that it's fundamentally different from a consumption perspective.
Yep.
But there's a lot of stuff, Ashwin, just so that if you want a technical analysis of that, Chavishi keeps showing me, there's a lot of chartists who are showing PE versus market cap versus funding, and there are enough charts to prove that this is nowhere resembling the mirror of that. Because PEs versus price earning, not PE, private equity. PE, market cap, momentum, cash momentum. The 3 ratios are very different from today than they were then. There's a lot of depth in the market.
Yeah.
Whatever. Hi.
Hi, my name is Anirudh.
Okay.
So I have a bit of a basic question. Like, I wanted to ask, when should I ideally get a funding? Right, from the beginning itself to start with the business, but then, one question raises is, if I come in front of you for funding, before even I enter into the market, I'm just with that pile. Okay, so it's very difficult for you to trust me. I'll have to bend down to my knees and I'll have to compromise a lot of.
That's worth it, man. That's worth it.
Yeah, true.
That gets you money is worth it.
Correct. But the second option I have is maybe I can prove it to myself. I can maybe enter into the market. I can work on my concept. I can have a more authenticated POC. I can work for a year or so, and then I come in front of you and put my conditions. But again, the threat is, as soon as I'm launched in the market, I'm just another idea. Irrespective of how innovative the idea is, once it is launched, it's just another idea. So what is the best time to get the funding?
I would think there's a fairly straightforward answer. So one is the idea and the other is the team, right? So if your idea is so disruptive, or you believe it to be disruptive and you can communicate that, then it might be a good idea to go out and raise some capital, provided you do need to do it at that point. Because obviously, when you raise capital on day one, you're giving up a lot more than when you do it 12 months later. The team aspect is more important, which I find in India, is if you're a serial entrepreneur. So let's say if a Sachin or Binny Bansal go out and raise another, have another business idea, they're going to get funded, not that they need it, but they're going to get funded on day one. If you're a first-time entrepreneur, then by that logic, you just have a little bit of, ways to that you have to prove yourself. So I would say then it's better to bootstrap it, build the idea up over a period of 6 months, 12 months, whatever time it takes, and then go out and pitch it to a VC.
There's Alok Mittal shared with me a table which doesn't seem to appear on the web anymore. It was called the Saratoga tables, but nevertheless, there's a very nice chart in the Economic Times front page 3 days ago, which I have posted and tweeted, got a lot of likes, which is the penultimate cap table after 10 rounds of funding and what founders are exit. And it's a very beautiful metric of 8 to 10, 5 to 6, 3 to 4% at $10 billion valuations. Now, if you know math and if you know how to use Excel, do this for me. Reverse the Excel sheet, get to 5% at 10 billion in the last row and build a reverse cap table. I can tell you right now, it doesn't matter whether you lose 30 or 40 in round one, because as value increases, your cap table will get slimmer and your market valuation will get higher. So it's just a very simple mathematical table. Ashwin Sanghi.
This question, I'll give a quick introduction about myself. My name is Aditya. I stay in Andheri West, and we were in the top 10 startups at IIT Bombay. I'm the co-founder and the CEO of Food Tropics. This question goes to Rajan.
Can you say it again?
Food Tropics.
Food
Tropics. Wow. Yes. This question specifically goes to Rajan. So it was great. It was my first RodinhoodsHood experience ever, and I have been stormed by, like you say, Tsunami. I've been stormed by so many people asking us to attend this session. That goes as a compliment to Alok. So the question goes to Rajan. At what stage do you invest in companies?
And Nirvana?
Come again?
At Nirvana, the fund?
Yes.
Yeah, we do what we call pre-Series A, so between seed and Series A. So between $500,000, $3.5 million, in terms of what that means for you, is product, some product market fit, and some initial traction is good.
Yeah, and another follow-up question is that do you invest in growth businesses or lifestyle businesses?
We don't invest in lifestyle businesses. What we do is, if I see a lifestyle business that I think is good, I try and counsel the entrepreneur to go to an HNI that we may sort of have access to, because those are businesses that should be funded by different types of capitals.
Yes.
As regards growth, it tends to be Series B, C. We typically don't do that just because we have a very small fund, and that's not our strategy.
Sounds good. Thanks. Thanks a lot.
Just a question. Why would you ask this? Why you asked, do you want to travel to the North Pole or South Pole? Why did you ask that question? Like, would you invest in growth and then you said lifestyle? If I may ask, what inspired that question?
So this Kejriwal comes from the
okay.
who just asked.
It's somebody else citing the question.
No. So this was like an avatar for me. I'm just trying to get my right.
I've never heard that question before. So
yeah.
Thanks.
Do you think we could do a curated session on the Rodinhoods? Ask Arihant, ask Rajan.
Guys, these guys don't. I tell Rajan that when you want to use the loo, when you're traveling between meetings in Bombay, come to my office, and he doesn't have the time.
No, come on, that's not fair.
I mean, there are a lot of questions.
Of course,
we're running out of time.
I think what we do.
I could just send.
No, Asha, what we do is we get some really, nice volunteer to go to their office, videotape it on the phone, so that it looks real and rich rather than because it's much easier to take half an hour of each of the time. Just videotape some of the questions. Rapid fire, right?
Absolutely.
Okay, great. Thank you.
Great. Thanks, guys.
So thank you.
Thanks, Alok. Thanks for engaging me.